In this video, we're going to talk about finding the best entry for short selling stocks. Stay tuned. Hey traders, a very warm welcome to you. Okay, so in this video, I'm talking about short selling stocks, specifically stocks as opposed to currency pairs and indices and all that kind of stuff, stocks, because they're slightly different. And I really enjoy trading stocks, and also really enjoy trading stocks from the short side, because when it's right, it works so well and it works quickly as well. However, you've got to be careful. It's a little bit different. You know, short selling a stock versus short selling a currency pair. Obviously a currency pair, when you're short selling the pair, you're still buying one currency against the other. You're just flipping the kind of equation around. Short selling indices, it's similar, but there was much more two-way flow as well with indices, generally speaking. Short selling a stock, you are betting against the company. Now I'm looking at this from more of a swing trader's perspective as opposed to a day trader's perspective. Obviously, if you're day trading, you're just using the ebbs and flows, and shorting and going long is exactly the same. You're just betting on the kind of direction the next 15 minutes, hour, 2 hours. I'm talking more of a swing trading basis. So you think that the stock is going to kind of go down over a longer period of time, it's overvalued, whatever it may be. Let's come to that. In fact, let's go to that right now. So the first way of doing it is to look at valuation alone. So you look at the valuation and you say, you know what, the story behind this stock is okay, but it's hyped up. It's based on what they could do in the future. There are plenty of stocks out there doing that, like Tesla, we had Amazon at the beginning, but that's the issue you have with that. You've got to have deep pockets to be short selling stocks based on a valuation and based on the story. So if you believe the story's hype, if you believe it's overvalued, this chart could still be going up and up and up and up and up. There's no kind of cap onto it. And that's the danger you have with swing trading, short selling stocks. You can lose many multiples of your risk, because it could go up tenfold before it finally comes down, if it even comes down at all. Perhaps it goes up tenfold, comes down half, and kind of settles there as a valuation, and you've hit it way too early. So you've got to be very careful with that. And one way of looking, if you go onto something like finviz.com, finviz.com, then you can scan and see the amount of people that are short for the ratio of the total amount of shares that are held in short as opposed to long, and you can see that as a number, as a percentage of the total shares float that are in float. So you can see, hey, a lot of people believe this story is wrong, and often that thing is going to squeeze higher and higher and higher. So I'm always a little bit cautious of that. That can be something that you get it, you say, hey, you know what, I think the story's wrong on this stock, blah, blah, whatever it may be. Put those into kind of a watch list for stuff that maybe will get phase two, which we'll talk about in a second, the technical pattern. But just going short based on valuation alone is hazardous. And don't forget, it's you versus everyone else. At the moment, that price is at 100 and you think it should be at 50, you're wrong at the moment, because that's what a buyer and seller are agreeing at. And so, of course, you're assuming that the bubble will pop or something will happen and it will come down to your level. Think Big Short, the Big Short that was out of the cinema and the book and all that kind of stuff. The same kind of theory, but they had to have deep pockets as well, going against them. So unless you have those deep pockets, you've got to be cautious of that. So what about technical patterns? Technical patterns are going to be something like, hey, we're now starting to roll over. It looks weak. You know, we're putting in, good down days. We're consolidating at lows. We're kind of breaking through support levels, all the kind of usual bearish patterns. And because you've got them already in your watch list, which is why I think it's quite a good combination to have these two together, you think it's a little bit frothy with valuation, or you believe the hype's a little bit too much. And then you add that to technical patterns. When it starts to break down, then you can get on board on the short side. You can start to sell short on your pullbacks or pull back to resistance levels. Support, turn, resistance, that kind of stuff. Usual technical patterns. One thing to mention, may as well mention it here, guys, is the cost to borrow when you're selling short. If you're traditionally kind of borrowing stock and then selling it short, saying if you're using a spread betting broker, CFD broker, whatever, they're going to charge you to hold that stock short, and some of the stock that's very popular to short will be very expensive. Sometimes as much as 100% per year you have to pay just to borrow that stock. So you've got to be very careful, and you've got to. This is why this is a bit dangerous sometimes, valuation, because it could go months and months against you, and you're paying cost to borrow the stock, and then it comes down. You might end up breaking even. At least if you're using it on technical patterns as well, then you kind of can, hopefully you're right in a shorter time frame. And you might not even be able to borrow the stock. There are some shares you can't short, so that's bearing in mind as well. But that's just kind of technical details. Let's look at operations here. The third one is a catalyst. This is a good one to get involved in. Again, you combine it all. So you've got your valuation you think is frothy, you think the story is a bit fluff. Technical patterns, you're waiting to see that kind of aggressive selling or the kind of change in sentiment, the change in chart. You know the difference when you go from bull to bear, that transition period, you see that. And the catalyst, that could be earnings. You know, bad earnings, profit warnings tend to come in threes. That's a bit of a myth, but generally if they're profit warnings, they're going to get multiple profit warnings. And maybe if it's a short, you've kind of got two categories, haven't you? You've either got the story that everyone believes is a little bit overhyped, and you've got actually the stock that's broken. And the stock that's broken is a company that's just doing poorly, they're losing money, and they're on their way to bankruptcy. And you've got a kind of two kind of things to look at short selling. So, you know, a catalyst for that could be if it's a frothy story that they're just not selling what they're supposed to, they're not getting the sign-ups or whatever it may be. If it's a kind of broken stock, they're just getting worse and worse. You know, the problems are bad. You get earnings gap lower, and then maybe you can short it on that gap lower with a kind of stop in the middle of the gap and look for a much more of a push down through to the next earnings, and perhaps trade it like that. So a few ways of trading it. You've got to be a little bit, I say, cautious when you're short selling stocks, but if you get on the right end of it and everyone's piling long, and then the whole thing changes, you've got a lot of funds, a lot of institutions who are going to be dumping that position over a period of time, skews the supply demand, and you can make a good profit on it. So I think the best way of doing it is combining that kind of thing, finding your best entry. You already got a catalyst, you've already got a frothy valuation or something you think is a bit overhyped, or it's a broken stock. In other words, it's just not performing, but be careful of the counter trend rally on those ones. Technical patterns, so your classical technical patterns on the bear side, and then it may be either or, using a catalyst, kind of an earnings catalyst, or some sort of fine or some sort of court problem or anything like that which was bearish for the market. Anyway guys, hope you enjoyed the video. Take care, good trading, see you in the next one. Bye bye.